Hey traders, I'm Charting Man Dan of the Chart Guys, and in this video I'm going to give you an example of how as a trader we can be bullish and bearish at the same time. It all depends on what time frame we're looking at. The example I will use will be the regional banks, and we're also going to check in on the rest of the broader market, including the cannabis sector. Let's get to the charts.
So first we're going to look at the S&P 500 and the NASDAQ, and then we'll check in on the financial sector, and I'll tell you what I mean by being bearish and bullish at the same time. So on the S&P 500, we closed fairly flat, unable to break the high of Friday. But for me, that's a win for the bulls, just in the sense that Friday was straight up, big bull day. And this is very healthy consolidation. The bulls are attempting a 4-hour bull flag to try and see continuation here. That said, definitely going to be prepared for the possibility that we have a daily lower high shaping up in the S&P 500 because of the size of the pullback last week before the bounce got started. And if we set a daily lower high in the S&P 500, I am going to hedge some of my IRA exposure just to be extra safe. For the NASDAQ, same deal, a little bit stronger. And I'm using the futures chart because the futures still has resistance. If you're looking at QQQ, it broke to the highest level that we've seen in 8 months today. But if you look at the futures chart here, you can see that we rejected from resistance. The high from May 1st is a rejection. So that resistance is still in play. And again, I'm bullish the broader market, but I am putting on my bear glasses to be ready in case things shift. And one of the ways that they could shift would be a rising wedge on the NASDAQ here. But we would need a red day tomorrow for that to be in play. So watching closely. CPI on Wednesday morning at 8:30 a.m. Eastern is going to have a significant short-term implication. Other than that, we're just going to be looking at banking headlines for any fundamental short-term reactions. But CPI Wednesday, definitely worth keeping an eye on. As far as the tech sector is concerned, there's some intra-sector rotation going on where it's been Apple and Microsoft leading the way. Apple on earnings, Microsoft after earnings. And we're seeing a little bit of a potential shift where today Apple was very slightly red, Microsoft was down 0.6%, and our previously weaker names, Meta had some relative weakness last week, daily consolidation, set the daily higher low today, and Google has been trading sideways. Big bull day for Google today. This is, to me, is intra-sector rotation, where our lead tech bulls are taking a bit of a breather, and our weaker tech names over the last few days are showing relative strength. And that's a good sign for the bulls as long as that happens, just like if we get sector rotation going on in the market, which we have often over this 4 or 5 month bounce, that's bullish as well. So Google is testing resistance. We just had news after hours. So the relative strength is not surprising. The news was, they're going to unveil AI, whatever AI they're coming out with. And so Microsoft and Google have a bit of an inverse relationship when it comes to AI headlines because they're battling it out as far as being competitors. And so Google was straight up today, and now after hours, we are testing our daily resistance zone. And I call it a zone because between 108 and 109.17, we've topped out about 5 times there. And so we're battling this resistance after hours. And we'll see if the bulls can get over it tomorrow during regular trading hours to confirm the weekly bull flag and try and add some further bull momentum to the NASDAQ. Microsoft, with its daily inside bar today, you can see its bearish reaction. Not a huge bearish reaction, but it did react bearish to that headline after hours. So keeping a close eye on these big tech names. Amazon yet to really pick a side, whether it's bull or bear over the last couple of weeks. Keeping a close eye on that. But overall, burdens on the bears to prove us that the NASDAQ is weakening because it is showing us a good bit of strength. And even today, we had a bearish headline come out at 2 p.m. as far as saying, we've got, I forget what it was, Fed says credit, debt, whatever. Anyways, it was a fast, hard drop, V-shaped recovery of bulls buying the dip. That's Amazon, but that's what it looked like on the NASDAQ. V-shaped to higher highs. So bulls are still buying dip, and we'll see how long that keeps up. So KRE regional banks. I am bearish but bullish. So I was bearish this morning, and on the live stream, that was my trade setup for the morning. I am scouting a bearish entry on KRE. The reason is, number one, We are in a daily downtrend. So anything under 43.02 is a lower high. Number two, this is our second gap up open in a row. The hourly RSI on the morning was up in overbought conditions. That's a reverse back burner. So back burner triggering in a daily downtrend and just looking for a top fish play. And so my strategy was I'm looking bearish for a daily lower high in KRE. And so I grabbed a short right out of the gate, 33 seconds into the morning. I generally don't trade that fast on the open. I'd say I do that 1 out of every 10 days. And I usually like to wait for price action to develop and to show me, levels to play off of. But my mindset was I'm expecting profit taking on the gap up open, and I'm just looking for a level to play off of as a bear. And so we opened, and for 20 seconds, we bounced around a little bit. And then as soon as we hit a new low of the day, after the first 20 seconds, I mark it short, and my stop goes over 39.40. I'm risking 20 cents. And the reward ends up being $1.70. And I'm still in a swing position because it ended with an hourly bear flag. And I'm looking for the possibility that if we break the low of today tomorrow, that daily lower high is set and daily consolidation will be underway at that point. So that's the bear side of things. And I have that bear position. We'll see how it goes tomorrow. But it's a lot of profit cushion after taking 2/3 of the position off into that weakness. And obviously there's a lot of headline risk in both directions in this sector overnight. Where I am bullish is scouting for a 4-hour higher low. This was a V-shaped recovery between pretty much to end last week. And there's a lot of space for a 4-hour higher low to be the result of this consolidation. And so I'm looking for a 4-hour higher low compared to 34.52. And I'm watching the 4-hour retracement size for clues. If we retrace over 50%, that's a red flag for bulls. If we retrace 50% and hold it, then we're going to be looking for the possibility that bulls confirm a 4-hour uptrend. And we're in a position right now where, in my opinion, bears need either CPI to be bearish or they need a new banking failure headline. Because I did a poll over the weekend and 8 out of 10 people think that there's going to be another regional bank failing in May. So that means no news is good news in this sector because a lot of people are positioned bearish in this sector. It's a crowded trade at this point. This is not a new trade. This trade has been playing out for over 2 full months at this point. And so, in my opinion, we're going to see this sector overdone to the downside. And we're going to see a great buying opportunity eventually. It's just a question of what nobody knows the answer to. Are we done seeing regional banks fail? If the answer is no, we're probably heading lower. And if the answer is yes, we're probably going to see some pressure put on bears and we're probably going to head higher. So I am scouting. And another reason that I'm scouting this long is because I have been day trading KRE in both directions like today and have built up a decent amount of profit trading it over the last couple of weeks. And so I can definitely make an attempt trying for a longer term swing trade. And if I were to stop out, then I would just give back, a partial amount of the gains from the last couple of weeks. So that's my mindset, in a bearish position, but looking for a long entry and looking for the 4-hour higher low. Now, whether I take that position before or after CPI depends on the price action tomorrow, but might skip the CPI reaction and then look for a potential entry opportunity after that, knowing that that is an unknown news event. So XLF is in the same boat. Second gap up open in a row today. Profit taking on the morning. And if the low of today breaks tomorrow, the daily lower high is set. And the bulls will try and set a daily higher low compared to the 31.26 low of last week. So still watching the financial sector closely. Lots of significant opportunity. Took a trade on PACW off this triple bottom today as well. There was a nice bounce off that triple bottom, entered at 584, stop at 576, risking 8 cents, and we end up going up 46 cents. Didn't capture all that move, but scaled out into the pop, stopped out the rest on the $6 break. There's a lot of trading opportunity for day traders in the regional banks. Semiconductors going for a daily uptrend. AMD bulls showing up in a big way post-earnings. We know NVDA has been our lead bull, and it just hit the highest level in a year or however long it's been. Daily uptrend continues to be our guide. Double bottom, higher low, anything above 272.40 keeps the daily uptrend going. 300 psychological resistance, but semiconductors with some strength trying to see SMH confirm the daily uptrend if we can break 125.18, which is in play. That said, anything under 131.79 is just a weekly lower high, and if we were to see the NASDAQ bears prove something to us, we would likely see the semiconductors set a weekly lower high. So I am keeping an eye out for that as well. Healthcare tightening up. So I'm just watching healthcare in this tightening daily range, and I'm waiting for a break of one of these levels to give us clarity in the short term. It's a weekly bull flag attempt, and if we break this daily tightening range bullish, probabilities for the weekly bull flag will increase, and if we break it bearish, they will decrease. But sideways at the moment, just waiting for clarity. Pretty much just want to see is XLV going to join Team Bear, which is where IWM and XLF and XLE currently reside, or is it going to join Team Bull, which is where the tech sector and the NASDAQ currently reside? IWM, nice bounce the last couple of days, but it is still technically a daily downtrend. Lower high, lower low, lower high, lower low. Anything under 175.70 is just another lower high, and we failed that level by 15 cents today. If the low of today breaks tomorrow, have to then form a daily higher low to try and shape up the trend change. So the burden of proof is on the bears for the S&P 500, the NASDAQ, semiconductors, and the burden of proof is on the bulls for the financial sector, the energy sector, and IWM. Biotech sector bulls have been strong. Daily consolidation started today. Anything above 79.47 will be a daily higher low. We're watching EMA 12 support, this red line, and we're watching to see, do we get to hourly oversold conditions? And right now, we would need another solid red day tomorrow for that to try and shape up. The biotech bulls have been on Team Bull over the last couple of weeks. Nice bounce from the recent lows. Cannabis sector, so still definitely interested in the cannabis sector. And daily inside bar, testing 280, the high of the bounce at this point. Still an hourly uptrend. The low of today is our new hourly higher low. So resistance is in play tomorrow. And I care about TLRY much more than CGC. Why? Because if you look at TLRY divided by CGC, it's the strongest it's been compared to it in years. Play the stronger names bullish and the weaker names bearish. CGC trying to get a weekly stair-step bull break after months, but a very weak name. And MSOS on the US side of things. Daily uptrend confirmed. Bull still holding firm, but need a break of 637 to try and keep putting pressure on shorts. I'm going to be covering the cannabis sector a lot as momentum shifts. This is just the first little baby sign of a momentum shift over the last couple of weeks, but I've said this many times, I'm going to make a lot of money in the cannabis sector. I have zero doubt in my mind whatsoever. Why? Because we know there will inevitably, eventually, whether it's in 2 months or in 4 years, we will see cannabis rescheduled. We will see a surge of hype and euphoria enter the sector, and I'm going to smash it. I'm going to jump in aggressively with size, and I'm going to take my profit on the way up and not hold any bags once that pump tops out. And I'm going to look to do the same thing in the psychedelic space. That's one of my specialties as a trader, is jumping on hype and taking profit to not hold any bags when the music stops. And so we know that there are catalysts that are coming to this sector that are overdue, but they're coming. And so again, it's just one that you don't want to fall asleep on. At least I don't want to fall asleep on it because I've been following the sector for 13 years of trading. And it's been very good to me. And it will be again. I am certain of it. The dollar, still holding its base of support. This is going to be key as well, heading into CPI. A break of 102.41 for me would be a convincing hold of support. And a bear break is exactly what broader market bulls, metal bulls, crypto bulls want to see. So this is a key setup this week as we continue to tighten just above support. And these are 5-month lows. Gold daily inside bar, trying to hold EMA 12. We did see a lot of profit taking on Friday. And one thing that I said on Twitter on Thursday was, because I'm bullish metals with a nice technical setup, but on Thursday I made a message. My post was, I sure wish there were a lot more metal bears on this thing. And I was referring to Twitter. I wish there was a lot more metal bears on social media. One of the reasons why I'm comfortable remaining bullish the broader market is because of how many bears are out there constantly posting about how we're about to collapse, and that's just, potential fuel to continue higher if shorts have to continue to cover. We've seen what NVDA does. A lot of people were looking short on NVDA, valuation, yada yada, and who's buying up here? It's shorts that keep getting forced out of their positions. And so that's something that's a good thing for broader market bulls right now, is so many people are bearish. That said, I'm only seeing bullish posts about metals, and that makes me uncomfortable. I never want to be on the same side of the boat, on the same side of the trade as everybody else, because that's when the boat flips over. And so on gold, I've been putting my bear glasses on to be keeping an eye out for this potential rising wedge, because when everything looks good to go and everybody's on the same page and we're heading to all-time highs, that's when I get uneasy. And so this is a potential rising wedge on the daily time frame that we need to be keeping an eye on. Still a daily uptrend, but bears are attempting to defend the all-time high, which is a triple top at this point. And silver, same deal, daily inside bar, holding the uptrend and EMA 12. Weekly bull flag confirmed with zero follow-through at the moment. And the miners need to hold the low of Friday, a break of the low of Friday for GDX and any other miners would be a bit of a red flag of losing momentum. It would be a weekly bull flag confirming with zero follow-through. Oil significant bounce over the last couple of days. Still looking for a daily lower high, but a big enough bounce to try and shape up a trend change once we do top out. Energy sector, nice bounce the last couple of days as well, but a lot of profit taking today. Very correlated to the financial sector. Gap up, second gap up in a row for profit taking. And the bulls have to confirm a daily uptrend if anything's going to change here. We've closed lower than we've opened 5 days in a row. Natural gas, significant bounce off the lows. So trying to build a base of support around $2. And this bounce at this point is over 50% or right around 50% retracement, right at it. So that is creating space where if we fail 237, we then look for the daily higher low to try and form. We have not confirmed a clear daily uptrend in natural gas in 5 months, and I'm watching for that. Depends on what instrument you're looking at, but if you look at, UNG just hit fresh lows. Have to confirm the daily uptrend. All right, hope you're well. Do good things. We're going to end it here with some clips from a Beltane festival celebration I went to over the weekend, celebrating spring and fertility and Celtic roots and all that fun stuff. A little bit of a taste of life away from the screen. Full-on hippie.
Otherwise the ribbons will get caught in it. The rest of you, pretend you're at your...
Now.